Rates are going up. Rates are going up. You better lock in your rate. That's what everybody's hearing nowadays. I'm Mark Lima, your favorite real estate broker with the Lima Real Estate Group. And as usual, I am here with my preferred lender, Justin from EPiQ Lending. And this is another episode of the Mortgage Minute. Today, we are going to discuss what a rate lock is, when a rate lock is locked, and everything else that goes in with it. So without further ado, Justin, take it away.
Yeah, absolutely, Mark. So it's a great question. So the first thing is, in order for any lender or bank to lock your rate, you have to be in contract or in escrow on your property, because the interest rate is always tied to the actual address. So the best rule of thumb in any market is once you go into contract or escrow, that's when you want to have your loan officer or lender lock your rate immediately. It's even more important in the market we're in, meaning where interest rates are going up, is you don't want to go into contract on your new dream house today, not have your rate locked, and then next week the rates are higher. So once you go into contract, you always want to lock the rate. To add to that is most lenders or banks offer what's called a float down. What a float down is, let's say you go into contract today in your house, lender locks in your interest rate. You're 2 weeks into the process and something crazy happens and rates drop down. If rates drop down a significant amount from when you lock in, most lenders or banks will offer a float down where they can bring your rate down. So what I always tell clients is locking your rate. It protects you both ways. It protects you if rates go up. It also protects you if rates go down.
Awesome. And if you could just take a second and explain what locking your rate actually means.
Yeah. So basically, locking your rate is, again, you're in contract today, is the lender's going to lock in whatever the market rate is. You're locking that rate. The normal lock-in period is a 30 days. So most rate locks are for 30 days. That's going to usually get you the best terms, the best rate on your loan. You can do a longer lock if you want. So a lot of lenders offer a 45-day rate lock, a 90-day rate lock. That's going to be more if you're buying a new build or new construction where it's going to take more time for the house to be finished. But in general, locking your rate means you're securing that rate once you go into contract. And again, the standard time is a 30-day rate lock. That's going to get you the best rate.
Awesome. Very, very informative as usual. So once again, thank you very much for taking the time to touch base with us this week. And we will be here again next week doing the same thing. Have a great week and we'll see you then.